Are you? Shall I start then?
You start,
Well,
Dawn. I'll
Yeah,
I'll I'll leave you to it, and I'll be
brilliant.
back in maybe about 40,
Okay,
45 minutes. So how are you
okay,
getting on?
brilliant. So
Thank
welcome
you.
everybody
Sure.
to this training session. So what I'm going to do is we're going to do the introduction to local government finance. Now, what I've done here is I've got a set of slides. Some of these slides, when I put them up on screen, might have some more detail I'm going to talk about, but it's more just for you to take away. So I'm going to try and explain some key concepts and some key words that you will hear about the finances in as simple terms as possible. Now, if anybody's got any questions or queries, you're very welcome to ask me as we go. I can flick between screens and see if people put their hands up. So if you're thinking, I just can't understand that, I'd like to ask us, please feel free to ask as we go, or there's probably going to be about 25 minutes at the end to ask questions. So I will crack on then. So my name's Dawn. I'm the council's chief finance officer and the section 151 officer. And just so you understand, what we've done is when we've put these slides together, we did have a look at the local government association pack, if what they do for introduction to local government finance. So we've tried to marry that. Just for a bit of background information, some people say to me, why are you called a 151 officer? Nothing fancy. It's just that in the Local Government Finance Act, paragraph 151 states that every authority must have somebody that is assigned to look after the finances of the council. And that person has to be a qualified accountant. So that's me. So that's why I'm called Chief Finance Officer, Section 151 Officer. Now, this slide, lots of details. I'm not going to take you over it, but it's just the key responsibilities so you can kind of understand the key responsibilities that I have. So I've got responsibilities for setting the budget and maintaining that budget is legally balanced. I hold some corporate governance responsibilities, and one of them is about members. So I have to make sure that all the financial controls are adhered to in the council. Those controls are in place. And that could be controls. We've got expenditure controls. We have controls about recruitment of staff that have to be signed off. And one of the other things, obviously, a big part of my role is providing advice to members. And one of the things that I do, along with my team, is every report that comes to Cabinet has to be signed off by myself. So we make sure that anything that comes to Cabinet and members are asked to make recommendations, that you feel assured that you understand the financial implications of the recommendations you're being made to agree. And the last thing is obviously strategic leadership. So I sit on SLT, and a big responsibility of mine is looking after our 3-year finance plan, which we call our medium-term financial strategy. So I've gone back to basics on a few of this. Sorry, I've lost my slide pack. So this slide here is just looking at, this one first. This slide here is just looking at how much do we as a council spend in a year.
Okay.
So can I just check with everybody? Has the pie chart come up onto the screen?
Yeah.
Yeah, brilliant. I'm flicking between screens so I can just see if anybody puts their hands up. So what this shows is how much money do we as a council spend every year? And this is money that we spend on our revenue expenditure. So all that money that we need to spend to run our council day by day. So it will be our staffing, it will be our placement costs, our waste disposal costs, etc. So what you can see is in a year, so in next year, we as a council are budgeted or planning to spend £482 million. So it's a fair chunk of cash. Now, what this table shows is actually we have a difference. We have what we call the gross budget, and then we have the net budget. And the column in between is the value of money that we do not generate through local taxation. So we get £214 million in grant income that comes into the organisation. It's very specific how we have to spend that grant. And we basically spend it in accordance with grant, or we pass the money straight out. So we don't really have any sort of influence on how that money, that £214 million is spent. So I'll give you a couple of examples from that. So if we look at children's services, £85.8 million, that's a significant amount of money. That is predominantly the schools money that we get in to fund schools. We get that money from the Department for Education and we passport it straight out to schools. And if I think in some of my own areas in corporate and technical, in there is the money that we receive to pay housing benefits for non-working age adults. That is a grant that comes into us and we have to spend it in accordance with the rules and regulations around that grant. So this money here is, as I say, it's all grant money. And you could almost think if we didn't get that income in, would we still do those services? And then what we get to this net budget, this 267 million, is really the element of the revenue budget that we have control over how we set and how we can spend that money. So here what we say is, so that 267 million, where does it come from? How do we generate in that cash? Because it's not specific grants like I talked about before. So the vast majority of this money comes in through local taxation. So we get over 100 million from council tax. We get 46 million from business rates. We get one general grant from the government. So that's classed as a revenue support grant. And we get that in. It's not specific for anything. We can just use that to fund, our budget wherever. And I'm going to explain this at the end of the presentation, but we are in a thorough council. We are in a position where we are reliant on government support as well. And this year we're budgeting that we need £68.9 million of government support to get to a level of budget that we need to fund our services. So that's where that money that we collect in and we can have influence over where that needs to be spent in terms of corporate priorities, member priorities, statutory duties. That's where that money comes in from. The first two of that is very important. So our collection rates on council tax and business rates are very, very important because we need to make sure we get that money in to fund our services. And then here is a slide that just shows where we spend that money. So this is how we are planning to use that money in this current financial year. So you can see that obviously our children's and adult services use a big chunk of that cash. So obviously adults need 63 million and children's is 59. Central services, that's the finance services and Dan's corporate services, so legal, IT, etc. We've got housing general fund, so that's predominantly covers our TA costs. Corporate and technical, that's my kind of technical budgets, interest, levies and such. Obviously, we've got Claire's place services, so where all the grass cutting, waste collection, etc. comes. And obviously, this is the element where we need support on. That's our debt cost. That's the cost of funding the debt to the council. So that is how we are planning to use the money that we have budgeted to get in this current financial year, and how we're going to spend that across the council. So is that all clear to everybody? Has anybody got any questions? I'm just going to flick. Anybody got any questions? We're all clear? Good. Now, what we have in finance, what we have in terms of local government finance, we have two types of two types of expenditure. So what I've talked about here, where we're talking about our £267 million worth of spend, that is all what we call revenue expenditure. So revenue expenditure, as this slide shows, it's what we spend day to day. The bulk of it covers salaries, social care placements. It will be the cost of waste collection, disposal. It will consider, if we've got to repair a broken window in the civic centre or a broken chair in the chamber, all that day-to-day revenue expenditure, that's contained within our 267 million, and it's all spent within the year. So it's a bit like our running cost budget for a home. So, but what we also have, and I'm going to explain later on when we just talk about things that are outside of the revenue budget, is we have capital expenditure. So capital expenditure is when we pay for things that they're an asset and they have a life that's usually longer than 1 year. So it could be that we buy a building, we buy a new library, We enhance one of our facilities. So we're not just generally maintaining it, we're enhancing its value. Some of our road repairs are capital. And so that's what we class as capital expenditure. So when we do our reporting to Cabinet and when we come to scrutiny, when we take reports to Audit Committee, you will hear us refer about the revenue budget, which is our day-to-day expenditure, and we spend 267 million on, and we have our capital programme, which funds more our longer-term investments in the borough. So, and just so you're aware, these type of funding sources are we have to fund them differently. So we've already talked about this. Our revenue budget, our 267 million, that comes from local taxation. We get grants in there. We do have some fees and charges. So every year we have a long fees and charges schedule that will say, it will tell people if they want to get married in the registrar's office, how much that costs. People pay that. That comes in to help the budget. We will get some, if people want to, they get a fine at the library. So we have a long list of fees and charges, and that helps us support our budget. Investment income, not so much for Thurrock, because obviously after some of the challenges we've had, we don't have any investments. And we do have a few reserves that we might use, which is like one-off pots of funding that we can just bring into the revenue. So that's predominantly our revenue budget gets funded from local taxation and grants. Capital funding is quite different, and it's set out by financial regulation that we've got to fund it differently. And I've just given you a few examples on here, and as I said, you don't need to worry too much. Capital could be funded by what's called a capital receipt. So if we sold a building, we get a sale value from it. We class that as capital receipts. You could reinvest that in your capital programme. We can make contributions from revenue, but we don't tend to do that too much. We get quite a lot of grant income in from the government, and I have got an acronyms list at the end of this presentation, and that money. So MHCLG is Ministry of Housing, Communities and Local Government. So in central government, and you've got all your departments. As local government, we fall under. We call it MHCLG, Ministry of Housing, Communities and Local Government. DFE is Department for Education, so we get money from that department to expand our schools and our classroom provision. And then we've got Department for Trade, where we get various grants for sort of waste, mainly waste type of expenditure. We get some money from developer agreements. So if you hear of the term Section 106, and as a last resort, if we want to spend money on some capital assets and we don't have any other source to fund it, we can borrow that money from the Public Works Loans Board. But obviously, because of the financial position that Thurrock's in, we really try to minimise that, because if you borrow money, there's a cost to it. And what I've just put on the bottom here is just to give you some idea of our big capital programmes that you might have heard of. So you've got the Tilbury Towns Fund, that's funded from government grant. We've got the Grade Town Fund that's funded from grant. At the Thames Freeport, which some of you may have heard about, we had £25 million worth from government for seed funding to get some initial schemes up and running. The bulk of that has been spent, so we've just got 10 million left. And the one programme that's in here that is predominantly funded by borrowing is rebuilding the station at Stamford Le Howe. So that just gives you a bit of an example about those sort of bigger investments are part of capital, and our day-to-day is part of our revenue budget, if you hear those two terms. So we all okay? Oh, I've got a question from Councillor Taylor.
Indeed you have. And I've asked the question in the past because it confuses me. Why are we funding building a station in that surely a station is part of the rail network and therefore it's an asset for them, because if there's no station, people don't can't use the trains and so on. So how come we're stuck with that?
It's a very good question. We did actually get some funding. This is I would say is old Thurrock, so during Thurrock. We did actually get some funding to fund the station, but unfortunately it was applied elsewhere. And because because the council knocked the station down, we do have to build a new one. Hence why we have to fund it through our capital programme. Now, and that's, I don't like to use this phrase very often because I don't want to sound glib, but that's the position that we find ourselves in. We have minimised the station that will go up to minimise borrowing, and obviously some that is being done in conjunction with the railway, so and they will be contributing some, but we do have to put capital into that scheme.
Okay, fine,
Yeah.
thank you.
No, it's a good question.
I've been trying to get an answer for about the last 10 years. So
I'll have you. There you go. So I can't remember. I'm trying to rack my brains now. The source of the funding. It was the old. The funding came in originally from the LEP, so the local enterprise partnerships. It's quite old style funding. But I think we are only putting about 8 to 9 million in, so we really are minimising what we're putting in, and it's very clear that's the budget. Councillor Mumford.
Yeah, you just mentioned the £25 million grant, which was spent. Where was that spent?
No, the £25 million was for the seed funding. The LEP funding was spent on various other sites within the borough. So some money was spent on there's some civic provision at the new addition to the civic centre, and some of the shops were purchased in the run down to the station because it was going to be part of a wider regeneration scheme. But then obviously the intervention happened and plans slightly changed. So the one thing that we do need to do is, because the station was knocked down, we do have to rebuild it.
Right. Okay, thank you.
Yeah. So not ideal, and we certainly wouldn't be doing that again, but you know, it's just a bit of a legacy issue that we've got to manage. My slides. Now, what we've got on here is council tax. So we're just going to explain a little bit about council tax and business rates, because we talk about these things all the time in finance. So it's just to help you get your understanding of this. I thought it'd be quite helpful just to explain the council tax rates across the borough. Now, as you can see, so this is our Band D, the Band D rate for Thurrock. And when we compare when we compare council tax rates, so I've got a next slide which explains how council tax is set. So everybody is you're allocated to a banding. So you will all have a band for your properties. And when we compare across the Greater Essex region, we always focus on the Band D rate. So as you can see, Thurrock Council, we have the lowest council tax across Thurrock, across the Greater Essex region. And that is, so, and what happened is, in the run up to the intervention, when austerity started to hit for councils, where other councils were putting their council tax rates up by the referendum limit, which I'll explain, Thurrock Council tried to hold theirs and tried to do investments to try and fund the revenue budget rather than putting council tax up. And obviously I don't need to explain how that ended up for the council. But what it does mean is, at the moment, our council tax for Thurrock remains the lowest across the Greater Essex region. Now, when we levy our council tax increase every year, you will hear some familiar phrases. So 4.99% is the referendum limit. So we as a council cannot increase council tax over and above 4.99% without either a referendum level or express permission from Ministry for Local Government, Housing and Communities. So we have to get government approval for that. And that 4.99% is made up of two elements. So we have 2.99 is known as core council tax. And that, that's for general services. And we are allowed to add on a 2% additional, which is called the adult social care precept. Now that precept has been around for must be about 10 years, and it when you get something that's been ongoing for so long, it just becomes part of the council tax increase. What you will find is, when we levy our rates, so when you get your rate bill, the increase will be something like 5.1%, because in addition to, for Thurrock, in addition to our council tax rate, we have a little bit on there for parishes, and we have to levy a small amount for the fire and police across Essex. So we've got our 4.99%, and then when you see your bill, it'd be about 5.1% because we have to levy, we call it precepts, but it's sums for those other bodies. So it obviously comes into the council and we pay that money over to fire and police. Now for Thurrock Council, just so you get a flavour of what does the council tax increase mean. So roughly 1% increase in council tax will generate about £1 million in additional income to the council. So it just gives you a flavour of when we talk about increasing council tax, what 1% will mean. Any questions? No, that's good. Now so what we've got, so the reason why I've put this into this slide is because I've had quite a few questions since we've had the new administration, is how much of an influence can we have as a council on council tax and how much we charge businesses? And really, this is just to say we don't have any influence on council tax or business rates. It's very much set by the government. So obviously on council tax, there are 8 bands, A to H. So all properties are based into a band. We all know from the news that these bandings are very old and historic. And what we can influence, and the banding is assigned by the valuation office. So if somebody disagrees with their banding, they can't come to the council and object. We have to divert them to the valuation office. And there are a number of statutory discounts to a council tax. Once again, there are only a few that are that the council has discretion over. So we all know, like the most common discount is a single person discount. So if you live in a property as a single occupant, you get a 25% reduction. And there are a few other we have a few other we have a few other exemptions where for foster carers and children looked after, but we don't really have much discretion over our council tax. So we have a little bit of discretion around discounts, and we can also charge extra for empty properties and second homes, which is not really an issue for us in Thurrock. But really it's banding assigned by the valuation office. There are some discounts, but that's how your council tax bill is determined. Obviously we have an influence on how much we increase it year by year. What you will hear of is a local council tax reduction scheme. So we do have a scheme in place that is there to support our sort of vulnerable residents on low income. And we have a scheme in Thurrock, which is probably about midpoint across the schemes across Greater Essex, in that we require all council taxpayers, regardless of their income, to pay at least 25% of their council tax. And that costs us about £9 million a year. So that's just, if you hear the term, we call it LCTS. So if you hear that term, it means that our households on low income, and it's all it's all assessed, can access that scheme to help them with their council tax, but they still have to pay 25% of their council tax. So if we go on to business rates, now, sorry, there's quite a lot of words on this, but we have on business rates, now you might hear business rates, obviously what businesses pay. You might also hear that referred to as national non-domestic rates, and we use a short term of NNDR. It all means the same thing. Now, once again, we have no influence on how much a business pays in the borough. And we don't even have an influence on how much that increases per year. That is all determined by central government. So once again, if we look at the boxes at the bottom, all businesses are assigned a rateable value by the valuation office. So once again, if businesses don't like that valuation, they have to put an appeal into the VO. They can't do it by us. The government each year set the increase, we call it the multiplier, and they'll say they might say it'll be a certain pence in the pound, how much that rateable value is increased by. So they set that. And the government also set any reliefs on the scheme. So we don't have any discretion about businesses that we don't charge for. The biggest areas of relief are small business rate relief, it will be charity relief, etc. And basically it's your rateable value times your multiplier less any relief, and that's how we determine the council tax, the business rate bill for businesses. As I say, we have no discretion or influence on that in terms of what businesses get charged. So
Can I just ask a very
yeah,
quick
of course.
question, please,
No,
Dawn?
please do.
Sorry. When we, well, if it happens, if we merge with Basildon, I know you mentioned before that our council tax will have to
Yeah,
rise in line with their council tax.
yeah.
What percentage would that be different wise? Because I know you said before, if we increase it by 1%, it will go up. That gives us an extra £1 million. But when we actually do LGR and we do levy up with Basildon's rates, because they're ahead of us, aren't they? We're the lowest in the area, in the whole of Essex. So when we do that, what would that take that percentage up? Would we still get £1 million from it, or would we get more from that?
So what we do is, so that's a good question. So as you can see here, so we're 2254 for our bandy, and Basildon is on 2327. Now, when we join under local government reorganisation, and we all move into our new unitary authority arrangements, there is something called council tax harmonisation, because at some point in them areas, in the new southwest Essex area, people are going to have to pay the same level of council tax. You can't have Thurrock residents paying a lower value than Basildon. Now, there is a bit of choice, I think, in terms of how quickly you go to harmonisation and how you want to do it. But what we can see there is that if we were going to pay this, if Thurrock residents were going to pay the same as Basildon, at the moment we are, what is that? It's £70, £70 on a bandy property different.
Yeah.
So when we start that consideration of moving towards the new Southwest Essex, council tax harmonisation is going to be part of the consideration. And you ask a really good question there, Sarah. So our 1% will still be the same to us because it's still on our base. But obviously, as we start merging, it might slightly change in terms of what that 1% means, because we will have, when we merge in our new councils, we'll have the Basildon and Thurrock budgets, but then also we'll have the disaggregation of the county budget. So our budget value for Southwest Essex will change. So that 1% might change as well. Now, what that is at the minute, I can't tell you, because we need to understand what the cost of the county is, but that might change.
So it could be higher than 1% potentially.
All I'm giving there is just to give an indication that for 1% of council tax, it roughly relates to about £1 million. That will change as we merge towards our new unitary arrangement, because obviously our base will be different, but I can't quite tell you that yet. Specifically what it would be.
Yeah, I think Councillor Palmer Brickwood just put on there it's 3.22% increase.
All right. Okay. Thank you.
He's worked it out. Yeah.
Brilliant.
But is it not
72.56? Yeah. Thank you, Harley.
No problem.
So, so now some of this, I've just put these on the slides just because these are terms that you will hear a lot of when you get cabinet reports to council and when we talk about numbers. So it's just so you have a bit of a flavour of what we're talking about. Within finance, we hold some really big key strategies. So the finances of council, we have some big strategies. So we have the annual budget. So that sets our revenue budget. So that's that £267 million that we talked about before. That will come to cabinet and ask for approval. And that budget sets our council tax. We talk a lot about the medium-term financial strategy. So we call it the MTFS, But basically that just sets out the 3-year budget. So it's like our estimate for the next 3 years of how we're going to spend our money in line with priorities. And obviously the first year of that strategy is always the annual budget. So we talk about the MTFS a lot, and you will see that at Cabinet that will come to scrutiny. We have the capital programme, so that's a separate programme from the budget that sets out that investment in our roads, in buildings, etc. You will hear maybe about the asset disposal strategy, and when we report the finances to Cabinet every quarter, this will always be in the report saying, how are we getting on the asset disposal strategy? So as part of the intervention, the council had to sell a number of assets to generate money to pay down the council's debt. So the programme stands at 104, and that will be finished next year. We have a separate strategy you might hear a lot about called the divestment strategy. And that strategy, again, it's one of the key levers for paying down the council's debt, and it's selling the commercial investments that the council bought before the intervention, and we knew got the council into financial challenges. So we are selling them off. The bulk of them are done. And then this one is just the annual treasury management strategy. You will hear quite a lot about treasury management. It's very important to a council like Thurrock, and that's basically looking after the council cash and looking after the council's debt portfolio that we have as we liaising with our central government, how they're going to help us support that. So just on there, they appear a bit random, but it's just so you've got this on a piece of paper. These are the main strategies that you will start to get very familiar. You'll start to hear a lot that we hold in finance. Now, this is a really bad slide. I'm really sorry, and the blue colour's not great, but this was just to help you understand. So we have this medium-term financial strategy, gets approved by Cabinet, and it's just to help you understand the key things that will be put in that strategy. So this table here is the core assumptions that are included in our current 3-year plan. So this is what we're assuming. It's what our funding, when we're talking about how much council tax, etc., we need to raise. So as you can see, one of the key ones, first of all, is our 3-year plan, which was agreed by Cabinet and Council in February, assumes that we put council tax up by 4.99% per annum. And obviously, if we didn't put that up, then obviously we'd lose roughly £5 million into our budget. I won't go through some of these because we can see the council tax collection, council tax is there, business rates is there, collection rates are very, very important for Thurrock. We have very good council tax and business rate collection rates. I know some people don't like when we talk about collection but it is, as you could see from the slide, local taxation funds a big chunk of our budget to fund our services. So it's very important that we get our money in a timely fashion. And we have to start making estimates for pay award. This is another significant issue for us, is in our future plans, we have very significant saving targets built into our budgets, and they have been in the intervention. So the council has already saved about £40 million since the intervention off its revenue budget, but it's got to save another 41 million over the next 3 years, and that's part of our deal with them, with central government. And any people or any councillors on the call tonight, we will be taking the Cabinet through some of our initial ideas, how we will manage to save that money from our budget. And as you can see, we've got our asset disposal, some chunky numbers, making assumptions that we will grind through them debt reduction strategies to make sure that we pay our debt down, and ultimately that treasury cost budget of 63 million can start reducing. So that's just to give you a sort of a flavour. If you hear, oh, things are set in the 3-year plan, this is the big things that are currently set in our 3-year plan. This gets reviewed every year, and this will be coming to the Overview and Scrutiny Committee in November to scrutinise our refresh of this plan. So, I've got some questions there. So who's first? Councillor Stringer.
Yeah, just a quick one on asset disposal. If I was
Yeah.
a private company, I don't know if councils are liable to corporation tax.
No,
Oh, okay.
no, we're
Can't
not.
bother asking the question then.
No, it's a good question. We don't have to do that.
Yeah,
No.
because like, if it's a private company and you
Yeah.
sold an asset and you made profit on that asset
Yeah.
because you could have, as council, owned the
Yeah.
property for 100 years and you sell
Yeah.
it, then you've got a corporation tax problem
Yeah.
unless you rolled it over. I
Yeah.
wondered if that applied to councils.
No,
It doesn't.
doesn't
Oh,
apply
okay.
to us.
All right, thank you.
Councillor Points?
Yeah, just going back to the asset disposal program, I think just so as everyone's sort of clear, out of the 104 million that we want back, I think we've got 79 million of
Yeah.
that already back, haven't we? So we're not,
Yeah.
it looks we've got
Yeah.
quite a lot of it back already. So we've not
Yeah.
got, in terms of money, not as far to go. So just so as everyone's aware of that
Yeah.
as well.
That's helpful. And that plan is due to be finished. We are liaising with our estate management colleagues. We need to get that plan finished by mid next year. So it's all done by the time we move into our new unitary arrangement.
Yeah.
Councillor Hyman Brickwood?
It's fine. Councillor Points has just answered my question that I was going to ask. Thank you.
Yeah. So on our two key debt reduction strategies, as Councillor points out, that asset disposal will be finished next year. We are also made really good progress on the divestment strategy, and it was interesting. I was just taking Sarah through this morning. So with the exception of the wind farms, which are two of the sort of chunkier investments still to sell, we've got a very small number of what we call tail end investments just to see through, and we are very much going through them to see how can we liquidate them, or are there some that we just might have to keep hold of. So once again, that thought process is very much concluded by the time we go into LGR, into our new unitary arrangement. Councillor Davies? Yeah, can you take your mute off?
Oh, sorry.
No, don't worry.
How much have we got to contribute ourselves to the LGR?
Well, we don't contribute as such. What happens is when we merge into our new unitary council, our budget, the budget of Basildon, and the equivalent budget and costs from the county sort of all come together. What we will have to do is so that's kind of we aggregate them all together. What will happen is there will be some costs associated with local government reorganisation. And what we've started to do is now some of them will be, I suppose, sunk costs in terms of things we've just got to pay. Some of them might be costs we pay at the start of the organisation. As efficiencies are gained, then we will make efficiencies to cover them. There'll be a payback period. And so if you think of, for example, my post, there's something like 15 of my posts across Greater Essex. You don't need it. So when you come into the new unitary, you just have 5 Section 151 officers. That's where a lot of efficiencies are going to come. In terms of how the council will fund its element, we are having to put a little bit of money onto reserve over the next 3 years. So the outturn report that will go to Cabinet on Wednesday does recommend moving, I think it's £2.7 million onto reserve to fund some costs for Thurrock. There will be money coming from the government. So the government will be giving some money, but I suspect that money from the government will pay a lot of sort of project management, that type of arrangements will be funded from that fund.
Okay, thank you.
You're welcome. So I'm conscious of, where have I lost my slide? Here we go. So what I'm just going to do now is I'm just going to go through a couple of key other funding sources that are outside of the revenue budget, that when you get the finance reports, you will hear a lot about these, just so you're aware of what they are. So general fund, we've talked about that. That's our 267 million budget to fund our running expenses, our staff and placements, etc. We have a capital programme. So what we've talked about, that's our investment. that we're going to do in assets across the borough for the next 3 years. Now, this is a bit of a scary slide because we couldn't think of any way of digesting it, but I'm just going to give you the highlights. So as you can see, over the next 3 years, the council currently has a capital investment plan of 144 million. And that is split over the general fund of 63 million, so council services, and the housing revenue account, which I'm going to explain in a minute, of 81 million. So that's our investment in council housing stock. Now, so that is, and then what we also show is how that program is going to be funded. Now, as you can see, out of that 144 million, very little is funded by borrowing. So it's about 19.9 and 6.4. And that's because as Thurrock, we have very limited as to what we can borrow, and everything has to be approved by the commissioner. So it's really important for us to really look at, search out them government grants, look at what reserve we've got, where can we sell stuff, where have we got housing stock that's no longer useful and we can sell it to invest in new stock. So if you hear of the capital programme, at the moment our capital programme totals 144 million. However, we are having a review of this. We've underspent against our capital programme significantly for the last few years. So we are looking at trying to reduce that. And, if we do reduce that and we don't need to borrow as much, that will help, repay down our debt. So that just gives you a scale of what as well as our 267 million, we're investing about 144 million in longer term assets across the borough. I think Councillor Davies, you got your hand up? Oh, sorry, it's an old one. So then we've got, now this is where I don't want to complicate things. We have got, now I don't know if people are familiar with this term, we have got the Dedicated Schools Grant, and we call it the DSG. That's a short name for it, but it's a Dedicated Schools Grant. And that is money that we receive in from the government to fund all the schools within the borough. So basically, we get the money in, we run what is called a schools funding formula, and the money goes out to schools because schools are funded on a per pupil basis. And we even get the money in for academies. So in Thurrock, we actually don't have, most of our schools now are academies. I think we've only got one senior school that's now not an academy. But irrelevant of whether it's a school that's run by us or an academy, the money comes into us, the Dedicated Schools Grant come in, we run the formula and we pass that money straight out to the schools so they can run their schools. I'm not going to go into the blocks, just to give you an idea. When we get the money in, it's split over several blocks. So we get money for the schools. We get money specifically for special educational needs, which is the high needs block. And we get money for early years. So those children that, are entitled to when they get to 2 years old, they're entitled to their 30 hours free childcare. We get that money in from the government and we pay it out to the providers. Now, I'm sure you'll all be aware from, just listening to the press, that the high needs block, so that element of the Dedicated School Grant that funds special educational needs, is under significant pressure across the country. And this is just an extract from what we spent last year. And basically what we can see is within all our other blocks, we maintained within our budget envelope. But on the high needs block, we overspent. So we've got more pressure against our special educational needs budget than we receive funding in for. Now, that and that is, this is across the country. The county's pressures on special educational needs runs into several hundred million, so they're very significant. And some London boroughs are at very scary sums. It's been a problem across the special educational needs sector for a while. Now, what the government is doing is they're now starting to put some support in for that. And the first element of the support is they said they will fund 90% of our declared deficit. And we have to submit a plan to them to get that money. So we've submitted our plan as the council, and we've applied for our 90% of that 5.3. So it's quite complicated. Is sort of special educational needs. But I think the message to take away, outside of our general fund and capital programme, we have this other pot of money that's for schools. That's all running okay, but we have a significant pressure on our special educational needs. It's a national problem, and there is a national solution needed to that. So that's another account that we've got. And then this one looks, sorry, this slide is there's too much detail on, but as I say, it's intended for you to take away. Now, we have a housing revenue account. And once again, we've got the general fund budget, our 267 million. We've got a capital programme. We have the dedicated schools grant. We have another pot of money that is called the housing revenue account. Again, this is what we call ring fence, so it can't be used for anything else, has to be kept separate. And it basically funds what we would call our landlord functions for our social housing stock. So I think we have about 5,000 properties, and basically all the rental income from all those properties comes in to the housing revenue account, and that income has to fund all the repairs, investment in those properties. So it will be general repairs, somebody's broke their tap. It will be longer term improvements to the properties. So, we will have a kitchen and bathroom replacement programme that we're working through. It will have to fund that. And so as you can see from this example here from last year, we got £63 million in to the housing revenue account, and we spend that £63 million, enhancing our existing social housing stock and starting to build some new housing stock. And so you will hear, you will get in your monitoring reports, you'll hear about the HRA, and just think of it is it's the separate budget that looks after all the income and the associated costs of us as the council, as the landlord, of maintaining our social housing stock. So it's just another separate pot of cash. And then finally, just because it's something that you might hear about again, is the final sort of separate pot of cash that we have is called the collection fund. And in local government, all your money that we bring in from local taxation, so our council tax and NNDR, even though it funds the revenue budget, we have to keep it in a separate pot. And that money is called the collection fund. And I've tried to put you a little example on here to try and make it easy. So when we set our budget, for 26-27, we have to estimate how much money we think we're going to get from council tax and business rates in the borough. So we've estimated this year we're going to get 147.4 million. So we go through the year, people pay their bills, we do the collection. If people are a bit naughty and don't pay, we put them through our recovery process. And then we get to the end of the year and we tot up how much money we've actually collected. So I've said, if we actually managed to collect 148 million, we're £600,000 up, because we set our budget. We said, right, we're going to get money into fund services to the tune of 147.4 million, but actually we've collected more, but we haven't spent the 600,000. So that's good for us. We've got extra money and we can build that into our budget following the year. So we get a collection fund surplus. So when you see budget reports, you will hear about surplus and deficits. If it's the other way around and we collect less than we've estimated, then we get a deficit, and that's a detriment to our following year's budget. So what this signifies is when we set our budgets and we refresh our budgets, it's really important that we get our council tax base and our NNDR base correct, because we are making assumptions that are going into our budget, and we're spending that money because we're putting that income into our budget to spend. It's really important that we get that as correct as we possibly can. So, and it's because it's just another pot of money that we've got to legally account for separate. Probably managed to confuse everybody, but we're all okay. We're coming to the end now. I thought I'd just put this on because this is a new thing that we're doing as the council. So in terms of local government finance, we are governed by, it's called CIPFA, so it's a Chartered Institute of Public Finance and Accountants. So for example, I'm a CIPFA accountant. We have to do a self-assessment against CIPFA's financial management code. It'll give us lots of standards. We've got to assess ourselves against it, and we have to say where, and then we rate it red, amber, green, and we have to say against the 17 standards, where do we think we are not compliant? Now, we've never done this as a council. Obviously, we knew we had the intervention, etc. But now we've really got our finances more settled. We're in the process of doing that. And then what we will be taking to the audit committee in October is a realistic view saying, we've got our 17 standards. My view is we are compliant against 10 of them, but 7 of them were not compliant, and here's our action plan to get compliant. It might be that we can't get there on all of the standards, and it's the same for all organisations, because it might be that we don't have the funding to get there, or we can't recruit the staff to get there. But we will, it's a fair assessment of, it's part of our governance about this is where we are and this is how we need to improve. And then what we will be doing, that will go to the audit committee, and the audit committee will assess the they will be like the scrutiny function for that self-assessment and our resulting action plan. Now, I was just going to finish off with, because I just maybe help people to have a consistent understanding of what exceptional financial support means. So when I showed that first slide, if I go back to it, when we set our budget this year of 267 million, because that's what we need to spend on our frontline services, we can't afford we cannot get in enough money to fund that because of our significant treasury management costs that are funding the debt. So we are in support here of what the government calls exceptional financial support. And so what we have as a council, sorry, I'm flipping around on slides. I'm probably shouldn't be doing this. As a council, we have a legal requirement every year to set a balanced revenue budget. So we cannot spend more than we get in our local taxation and our fees and charges and our grants. Because of our very high debt costs at Thurrock, we can't do that. So we receive support from central government. We've been receiving that support since 22-23, and we receive that support through what they call a capitalisation direction. Now, under normal circumstances, a council cannot borrow money to fund its revenue budget, its staff and placement costs. We can only borrow money for investment in our assets. But under this unique arrangement, we can borrow money to fund that shortfall. So in this financial year, we are estimating in our budget that we need £68.9 million of exceptional financial support from central government. And over the 7-year period, so it's been in place since intervention, and the model's always been for 7 years, we estimate we need 637 million. Now, it is acknowledged that Thurrock Council, we cannot manage financial sustainability ourselves. We cannot reduce our services to such an extent that we can fund our own debt management costs. We need help from central government. And the way that I describe it is it's a bit like a two-way deal. We as a council have to do everything we can to reduce our debt position. We have to put our council tax up. We've had to do our debt reduction strategies of selling our assets and our divestments. We have to make sure that we make our savings targets. That's our side of the bargain. And what we need from central government is they need to help us out by providing debt support. Now, they won't provide all debt support because every council will have a level of debt. So, for example, I was the 151 officer at the London Borough of Harrow for 10 years. We had £440 million worth of debt there, but the general fund budget could sustain it. The challenge we've got here is Thurrock cannot sustain the level of debt that we've got. Now, central government back in, I think it was February or March, announced the first tranche of debt support. that they're going to help the council out with. So it's 200 million. And we are currently just working with central government as to how that's going to work. But that will come in and it will help reduce our debt, which hence will reduce, those interest costs that we have to pay. So over the next 2 years, as we move towards LGR, it's really important that we continue to stick to our side of the bargain of, delivering our savings, keeping our service expenditure within budget, making sure we see those debt reduction strategies through. But we will be keeping this conversation ongoing with central government for further levels of debt support. But we will always hold a level of debt for Thurrock Council, because all councils do. But it's getting to that level of debt that we as a council can manage. So I just wanted to put that in, just so if people hear EFS and they kind of have a bit of a common understanding of what it means. And then last but not least, you'd be glad to hear, I just thought it'd be helpful to say, how do we manage all this then? So we've got all these pots of money and all these strategies. How do we manage it all? So here, we have regular and robust budget monitoring arrangements in place. We start them very early, so we've just done them up. We've already done period 2, so that's the budget monitoring at the end of May, and we'll have period 3 finished at the end of this month. And basically, that is us saying, as at this point in time, what do we think we're going to spend by the end of the year? Are we under or overspent? And the reason why we do that every month is if we get pressures or problems, we're getting them very early so we can sort them out, so we don't end up with a budget pressure. And our work in finance, it's very cyclical. So we set the budget in December and February, very heavy cabinets at them, and then those 2 cabinets are very, very finance heavy. We get all our budgets set. We then do our monitoring throughout the year. We do it monthly internally. We report to Cabinet quarterly. And in them reports, we will tell you how we're doing against our revenue budget, so our 267 million, how we're performing on capital, are we on track for the dedicated schools grant, for the housing revenue account, are we on track for fixed assets and divestments? So Cabinet will get a report on how we're doing against that. We do it internally monthly, we report to Cabinet quarterly. Then as we start to get to the autumn, we start the process all over again, where we're resetting the budgets and it goes through the scrutiny process. And then we get back up to Cabinet again and it's all approved and we start all off again. So it's all like in a big circle. So that's me finished. I hope I haven't managed to baffle you too much. There's some questions. Then what we've put at the end of this slide is we've put an acronym for you. So all the acronyms that you will hear, we've put what they actually mean. Just in case that's quite helpful for you. So I've finished my presentation. Have I got any final questions from anybody? No, that's good. Thank you. So, and as I said, Jenny be sending out the, well, thank you for your attention tonight. I really appreciate, I can witter on about this stuff for ages. So I appreciate your attention. I hope I haven't managed to confuse you. If there are any specific queries, you can always contact me. If you've got some queries, or you could go via Sarah. Please do fill your sheets out properly, because if there's further things you want information on, then, please do ask and we'll happily think about how we can do another bite-sized session for you to help with your understanding.
Thank you, Dawn.
You're very welcome.
Thank you so much, Dawn.
Thank you.
No problem. Thank you very much. Enjoy your evening,
Enjoy the rest of your
everybody.
evening.
Thanks.
Thank
Bye.
you.
Bye-bye.
Thank you. Bye.
Bye.